Back with you on the Market Day Report on a momentous Tuesday, the way it's turning out because of all the volatile market action, especially on the grain side of things. Well, let's take a look at the markets and go to the phones at the very same time and welcome a guest analyst. As we do it, let's go talk with Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Dewey, thank you so much for coming in here. This is a little out of the ordinary to have you on this time of the day and the week, but with all the things going on in the markets, I appreciate your help here. Let's take a peek at the corn and soybean trade, see what the market is doing right now. We have had double-digit losses in the corn market here this morning, based, I guess, primarily on the fact that we have had a lot of rain and not much threatening the crop as it goes through pollination. December corn down 12 at $3.55 per bushel right now, but there is a caveat that's 7 cents off of its earlier low. Now in the soybean trade, at times during the day, we were over 60 lower. Well, we're back there again. We have November soybeans down 61 3/4 at 10.75 3/4. The August contract is down 55 right now. In the wheat trade, Chicago wheat on September, we have it trading 3 3/4 lower at 426.5. I guess if there's a silver lining here, the wheat market is rebounding off of its earlier lows fairly nicely. Kansas City wheat on September, it's trading 4 1/4 lower at 407 1/4. And Minneapolis spring wheat trade, we're trading just a penny and a quarter lower at 498 3/4. In fact, the cotton market had been higher at times. It's been higher and lower today, but December cotton now up 47 at 65.46. So, Dewey, let's talk about this market here on the grain side of things. A lot of factors pulling on this market. It seems to be, if you exclude cotton, kind of a general, just a washout in all the ag commodity trade today, at least on the crop markets, and then you can factor in that crude oil too, I guess.
Well, that's true. You can always expect to see a volatile time when you get around the 4th of July weekend. Seems to be a lot of things happening there. And, of course, we did have rain over the weekend. We've got scattered showers forecast this week, and the 8 to 14-day forecast shows we're going to be looking above normal temperatures, but we're going to be looking at normal to above normal moisture. The thing you have to look here is starting in corn. You look at the funds, Marlon, they're long 925 bushels of corn, and all of those positions are underwater. So you can expect to see more liquidation come in the corn. I don't know if you recall, but about 2-3 weeks ago, I mentioned when corn funds were at a near record long position, I mentioned that also the commercial accounts traders were at a near record short position, and that is usually a forewarning of some very bad things to come, and that looks like is what has transpired.
Wow. Okay. So now, in your opinion, if there's that much left to, I guess, get squared up on positions on the part of the commodity funds out there holding all those positions like they are out there, what does that mean? How much more potential downside do you see in the corn and soybean trade right now, at least at potential risk?
I had some targets around 343 to 340, and I had another target lurking around 330. I think we'll probably eventually go down to about the 330 target.
Are you talking basis December now?
Yes.
All righty, let's talk about the soybean side. How bad could this get? Because we have a lot of growing season ahead yet.
Yeah, we do, and I think that's about, well, even though the market's down about 60 cents, that is, I guess you might say, one of the factors that we haven't broken the low that November made last month here at 1072. I think eventually we will do that, see the market get down to 1047, but I do have one pattern lurking that we could still go up and take out that 1186 1/4 high. Now, this is simply a pattern that's still a work in progress, but I would look for the soybean market to more or less trade sideways, maybe lower here till we get into, about the first part of next week. Maybe it could be as late as July 15th. At that time, we'll pretty well be through the forecast here that call for normal to above normal moisture. We might get a shot if it turns dry or hot then to possibly go up and make some new highs. Well, like I said, it's a work in progress.
Very interesting. All right, Dewey, thank you so much. And all the soybean contracts other than the first two are now below $11. All right, Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Thank you for your comments and your input on the exciting trade going on today. We're going to pause for a break, and when we come back, we'll talk about the livestock industry and check in with Superior Livestock as well. We'll be right back.